On Tuesday, we started to look at job order costing systems, which is just a system for keeping track of all the costs associated with producing various or multiple types of jobs. And so you want to think of this as kind of like the software, what the software would look like, the accounting software would look like that we would use to keep track of all these things. So we talked about the job cost sheet in particular and how that in digital format kind of keeps everything sort of on one document. We have our direct materials, we have our direct labor, and we have our manufacturing overhead. And we would have one job cost sheet for each job that we were working on, okay? So we talked about how we assign costs, direct materials, direct labor, to specific jobs, and then we talked about how we had to take a look at manufacturing overhead and the process that we went through to assign manufacturing overhead to various jobs. And we did that by calculating a predetermined overhead rate. So that was the last thing that we did on Tuesday. We did exercises 1 and 2 together. And then I said we were going to look at exercise 3 together. So hopefully that all sounds familiar. So for exercise 3.3, basically what they're asking us to do is says Mickley's company's predetermined overhead rate. So they went ahead and calculated that for us already, right? It's $14 per direct labor hour. And its direct labor wage is $12 an hour. The following information pertains to job A500. So they give us the amount of direct materials, they give us the amount of direct labor, and then they ask us what's the total manufacturing cost assigned to job A500. So let's just start there. So you don't really need to visualize the job cost sheet in order to do this, but I do think it's kind of helpful. So I'm certainly not going to attempt to draw the whole thing, but and the job cost sheet, we had certain information, and I'm just going to put the job number up here, but we had lots of information. There was a date field up here, a date started, a date completed. More importantly, though, we had like 3 sections here, right? If I'm just summarizing quickly here. So we had direct materials, we had direct labor, and then we had manufacturing overhead. And direct material, direct labor, and manufacturing overhead were then each divided into additional columns, right? And then we had like a summary section down here, where we fill that in to get then our unit price eventually down here. All right, so really if you think about this problem like a job cost sheet, it sort of makes a little bit more sense. So for direct materials, they give us the amount, it's $230. And all I need here would be that requisition number. You guys remember we talked about the requisition number? The requisition is the document that you would create when you're asking for certain materials. You just don't go taking materials out of the warehouse, the back room, or wherever they're kept. And if you have to purchase those materials, you need the proper approval or authority to do that. So there's going to be some kind of form you have to fill out to get that authority. That's really what the requisition form is. So we pretend there's a requisition form associated with this. And then our amount goes here. So we have the requisition number and then the amount. I'm going to kind of leave those labels out. Then for direct labor, we had a ticket number, which they don't give us. I don't see a ticket number here, but we had a ticket number, which was basically just that the document, the card, whatever it is, that illustrates how many hours that my worker worked on this particular job, okay? And it goes on to say here that direct labor is $108 total, right? But what I need to know are the direct labor hours. So how do I figure that out? Because they don't tell me how many hours were worked on the job. What do they tell me, though, that I can figure that out?
They can tell you the total cost of the labor and the rate that you have.
Yeah. So we have direct labor is $108, and they tell us in that first sentence that the labor wage is $12 an hour, right? So if I take 108 and I divide by 12, what do I get? I get $9 an hour. I don't even know why I grabbed my calculator. I didn't really need that. So I get $9. No. Wrong. Oh. Okay. It is. I'm a morning person too, so. Yeah, going the wrong way here, folks. So I get 9 hours. That's what I'm looking for, right? So I get 9 hours. All right. That's what we need. Now, why do I need the 9 hours? Well, because it goes on to say the predetermined overhead rate is $14 per what? direct labor hour. So when I go to calculate manufacturing overhead, right, I need this $9, right? And I'm going to put that here because my hours go here, right? My rate goes here, and they gave me my rate. My rate was $14, right? And so 9 times 14 would be what? 126. So my total manufacturing overhead applied to this particular job is the 126. And I need that number, right? Because the question is, what is the total manufacturing cost? And manufacturing costs always consist of those 3 main costs: direct materials, direct labor, manufacturing overhead, okay? So if I wanted to then kind of continue down here, I could just bring my numbers down here: direct materials, direct labor, manufacturing overhead, $230, right? $108, and now 126. What does that add up to? 464? Okay, so these would be my total manufacturing costs, right? Now, you didn't need the job cost sheet to figure that out, but I like pictures. I'm a visual person, so I think it makes a lot of sense when we just fill that in, because that's the form that we were looking at before. I mean, you could have certainly just listed them and done that. You could have done this calculation right in here, but you had to find this nine hours, right? You had to find this 9 hours. Okay, so that's how much gets applied to job A, 500. That is the answer to number 1. What is the total manufacturing cost? You go on to number 2, and it just says if job A 500 consists of 40 units. So remember up here we had date started, date completed. Good thing I don't have to draw these on a regular basis, right? And then we had the number of units, right? And that's where, they're telling us number of units is 40. Well, I'm simply going to divide by 40 units to answer question number 2. What's the average cost assigned to each unit? So I'm sure you already have that done, right? $11.60, right? Why is that important for me to know? What's the whole point of me knowing how much it costs me to make 1 unit of whatever this is? Yeah, so when I go to set a price, I know I have to charge, if I want to at least break even, right? I got to charge at least that, and I'm sure I want to do more than break even. I'm pretty sure I want to make a profit. And so whatever my desired profit margin is, I will work that into my revenue, right? Or my selling price of my product. Okay, you guys have any questions? Okay, excellent. All right, so we're moving on here. We don't have a whole lot. What I'd like to focus on here, the last part of this chapter, learning objectives 4 and 5, sort of, but not really. You'll see what I mean. It says, we're going to understand the cost flow, and this is actually really important. So again, I think if you can sort of relate or understand what the process is in any firm, whether it be a retail firm, a manufacturing firm, or a service firm, you got to think of the process itself. That sometimes helps us to identify what comes next and how we do those next steps. Learning objective 5 is how to use T accounts. You're in luck because I'm not gonna do T accounts. I'm sorry. Learning objective 4 is journal entries. We're not actually going to do the journal entries. I am going to do a little bit of T accounts, but nothing major. You guys don't have to, I'm not going to necessarily grade you on them or anything like that. But the T account is the visual that I use that kind of help describe the process. So that's why I like to include T accounts. Now, we need to understand some key definitions here. But before we do that, I always like to review sort of the process that we already know. So, back in Accounting 101, not just 1, Accounting 101, we started off with a simple service business, right? So we had this service business. And really, we didn't have to buy products to sell to our customers, right? Our time is what really translated into revenue. We charged people for time, right? We didn't charge them for a product. And so revenue, or the fees that we calculated or earned, was just a matter of the time that we spent doing whatever it was we did for those people, right? And now we moved on to the retailer or the merchandiser. And here, things got a little bit more complicated here because we did buy goods to sell to our customers. So what was the account that we used? Anybody remember that represented the goods we purchased from our suppliers or vendors to turn around and sell to our customers? When I bought something, what did I call it? You all know it, I know you do. If I purchase items to resell to my customers, what do I call that? Right, isn't that your inventory? Right? And merchandise inventory is an asset, right? Because if I buy it, I purchase it, I own it, it's mine. That's the definition of an asset, things that I own. So since this was an asset, right? It has a normal balance of a debit, and I'm not gonna, just trust me here, I'm just trying to show you the flow here. So when I purchased it from my supplier, right, it came in. Okay? Came in from the supplier and I added it to my merchandise inventory, right? So what happened when I sold it, as far as merchandise inventory is concerned? If it came in when I bought it, it must go out, right? All right, and it went to cost of goods sold. And cost of goods sold was that expense account that represented the fact that I sold that inventory, right? And then I would charge an up price, obviously. I would record my revenue based on the up price I charged for what I paid. If I paid $100, maybe I charged $150, okay? Because the whole point was for me to make a profit, right? And then this got closed out at the end. And this shows up on the income statement. But my point here is just this account right here, okay? So we didn't have that in the service business. Then we had a new account introduced when we talked about merchandisers or retailers, merchandise inventory. Now with each of these, we get a little bit more complicated. So we move on to accounting 102, which is where we are, in case you forgot. And now we're talking about manufacturing firms. And we use manufacturing firms because they make their own products, and it's pretty much the most complex form of if you're comparing them to the other two. That doesn't mean that the concepts that we're learning in this class can't be applied to a service business or a retail business. They can. But we don't need all of the concepts that we learn if we're applying to a service or a retailer. So the reason we use the manufacturer is because it's pretty much all-encompassing as far as all these concepts. Because when you're giving examples, you want to give examples that include as much as possible. So we use the manufacturing firm for that. So what I need you to think about is what happens before you sell something in a manufacturing firm. Manufacturing firm, you're making your own goods to sell to your customers, right? So you're making your own here, right? Well, if you're making your own inventory, technically, there is another whole process, right, that goes along with that before you get to the point where it's inventory that's ready to do what with? That's ready to sell, right? You got to make it first. So that making part is a whole other process that we haven't had to deal with yet. So that complicates the manufacturing business just a little bit. So you'll see that there are four definitions up here, 4 new terms that we haven't seen before. Why not? Because they're really only associated with a manufacturing firm, not with the other 2 types of businesses that we focused on. Okay? So we have this new account called raw materials. And really, it's a raw materials inventory account. I'm going to add the word inventory here. We have a work in process account. So we call that work in process inventory. I'll explain what that is in a minute. And then we have something called finished goods. Okay? So finished goods inventory, listen carefully, is the equivalent to merchandise inventory. Oh, I can't spell equivalent. Hold on. It's the equivalent to the merchandise inventory account. Why? Because they're finished, right? And over there, you're already buying them finished. You don't call them finished goods in the retailer because you didn't make them, right? So this is equivalent to merchandise inventory for a retailer. Does that make sense? So really, look, This part of the process is added on that we haven't had before, because what happens here is finished goods eventually get sold, right? And they become cost of goods sold too. All right? They eventually get sold and they become cost of goods sold as well. Now, we come back over here, and because these are inventory accounts, see, in the retailer, we only have one inventory account, merchandise inventory. But in the manufacturing firm, we have 3 inventory accounts that are representative of the process that our goods go through in order to become a product that we can sell to our customer. So because they all are inventory accounts, they have normal balances of debits, which means when we buy raw materials from a supplier, they come in as a debit, okay? Raw materials can be direct or indirect. Raw materials can be direct or indirect. So you guys already know the definition of direct materials and indirect materials, right? A direct material is something that becomes an integral or an important part of the finished product. Indirect materials are necessary, but they might be harder to allocate, like glue or things like that, cleaning supplies, those types of things. But they're all necessary for the process. So raw materials can either be direct or indirect. We'll talk about separating them later. But when we buy them from a supplier, they come in here. Okay? Now, why do I buy raw materials? Well, I buy them to use in my manufacturing process, right? So what are my 3 main manufacturing costs again? You guys all know this by now. 3 main manufacturing costs. Direct materials, direct labor, manufacturing overhead. The work in process account represents the manufacturing process. This is where we bring together direct materials, okay, right? Direct labor, where is that coming from? I'll tell you in a minute. And manufacturing overhead. Now, raw materials can either be direct materials, like I just said, or indirect materials. Direct labor is going to come from another account. That's kind of why I erased this here. So we would maybe credit, and I don't want to get into this too much. I'll talk about that later. But we have these 3 costs that are coming here. Now, this direct materials is coming from somewhere else. These are also coming from somewhere else, and also coming from here. So our source of this is various accounts. Our source of direct labor is the payroll account, all right, whatever that might be. But raw materials inventory is where we get our direct materials and our indirect materials, just one type of manufacturing overhead. But the work in process account is where we bring all 3 of those together, because the manufacturing process can't happen unless all 3 of those are combined together, okay? So in this account, this is where the manufacturing process takes place. Work in process. That makes sense, right? We're all works in process, right? So anyway, when we're finished with these, the combination of these give us our finished product. They come out of here, right? So we go out and into the finished goods, right? Out, right? In, out, in. They come out of work in process when they're done. If they're done, they're no longer in process, right? We can't leave them sit in that inventory account. So we put them in our finished goods inventory, which literally might be a warehouse somewhere where they await sale, or we ship them to another store to sell them, whatever the case may be. But when they're done being manufactured, we move them into the inventory account, because now those units are ready for sale. When we sell them, they come out of finished goods inventory and they go into cost of goods sold. All right? So, again, visually, think of this from left to right. The process of buying and selling. Pretty simple over here. We buy them already completed. We sell them. They become cost of goods sold, right? Up here, we didn't even have either of those accounts because I'm just charging people for my time. I don't need to use any of these accounts, okay? Over here, it gets a little bit more complicated because now I'm making my own inventory. So, where's my dotted line right here? From this point left, that's new, right? That's all new stuff because we had to make our own goods. So we need Now this is a new part of the process here. We've added an entire part of the process. So we need reports that tell us how that process is going. And so that last number 4, cost of goods manufactured, includes the manufacturing costs associated with the goods that were finished during the period. So it's the cost of all this. It's going to be the cost of all this, okay? And we're going to look at that today. So raw materials include any materials that go into the final product. They can be direct or indirect. I'm not crazy about that definition because it says into the final product, but it's really, we'll separate them because indirect goes into manufacturing overhead. But anyway, work in process consists of units of production that are only partially completed and will require further work before they are ready to sell. Okay, that's the production phase. Finished goods consist of completed units that have not been sold to customers, and then cost of goods manufactured, the costs associated with making your own products. So we're going to look at that today. Now, I know mine doesn't look nearly as nice as this. But anyway, mine looks slightly different from that. What we don't see on mine are period costs, selling and administrative, but that's okay. I wanted to just focus on the manufacturing side of things for now. So I'm actually going to skip the T accounts and the journal entries. And we really don't need to take a look at them just yet. Okay? All right, so we're jumping ahead here to preparing these schedules or these reports. And these reports, so if I'm making my own product, right, and we just talked about the fact that this is my main goal, how much does it cost me to make one item, okay? Well, you think about, well, why do I need an entire statement for that? Well, I'm probably making more than one thing, aren't I? So that statement that we're going to be talking about, the cost of goods manufactured statement, is going to tell me the cost of all goods that I'm making and how much money I've spent on those at a certain point in time. Because that added expense of making my own products, or that expense of making my own products, does factor into my bottom line, obviously, right? My goal is to make money. And so if I'm making my own products, I have a whole bunch of costs associated with that process that I don't have when I'm buying goods already finished from a supplier or a vendor. So I need a report that tells me how much I spent on that process. That's what the statement of cost of goods manufactured is. Cost of goods sold and an income statement just come after that. So once we figure out how much this process costs, right, it actually filters into cost of goods sold. And then cost of goods sold ends up on the income statement, as you'll see. Now, a couple things about this. I will never ever make you memorize a financial statement. It's pointless. And I would rather you understand how to prepare it by looking at another one or looking things up or, kind of doing one with you, as opposed to trying to memorize what the column headings and account names and all that's a waste of time. So I would never ask you to memorize something like that. I also won't put something like this on a test because it's too lengthy. And it would be the only problem I could probably put on a test. So we do it for homework purposes and, for the fact that it's important because there's some data we do need from it. But that's pretty much where it's going to end as far as whether it shows up on the test. So the schedule, okay, so we're going to start here with the schedule of cost of goods manufactured. Do you guys remember in Accounting 101 when we learned how to prepare financial statements, we started with the income statement first? You guys remember that? Why did we do that? Who remembers? Why did we start with the income statement? We remember? And then we did the statement of retained earnings second. And then we did the balance sheet third. Do you guys remember why we went in that order? Anyone want to take a stab? Too early. So the income statement gave us net income or net loss, right? And we used that number on the statement of retained earnings. Do you guys remember how they're all linked together? And then we came up with our final balance on our statement of retained earnings, and that value ended up on our balance sheet. So we had to prepare the financial statements in that order because the answer from one became part of the next one, right? So it's the same idea here. We do the statement of cost of goods manufactured first because it becomes a component of cost of goods sold. Cost of goods sold is a component of the income statement, so we still have to do these in a particular order. And all this basically says is that our schedule of cost of goods manufactured is going to be really a record of three things. Well, what are they? Direct materials, direct labor, and manufacturing overhead. Okay? Then we're going to actually calculate the cost associated with flowing from all these into finished goods. Okay? So it's really not a new concept. We just have more accounts now. Now, I love these next few slides. I love these next few slides because these help us to prepare this statement. They assist us in preparing the statement. So before we even look up here, I want to go back to something that I wrote on the board last week when we did our traditional versus contribution format income statement. There's the word I was looking for. So do you guys remember we had to calculate cost of goods sold? You guys remember that? Okay. So I put it up here for you too, right? We had to calculate cost of goods sold because it wasn't given. And we said, okay, we'll take our beginning inventory, right? And we added our purchases, right? Because purchases represented, our goods, completed goods that we bought to turn around and sell to our customers. What we had in inventory from the prior period, plus more inventory that we bought, gave us our goods available for sale. Then at the end of the year, we are required to take a physical inventory count, right? So we walk around our store, we walk around our warehouse, and we count everything. And we call that ending inventory. And when we subtract the value of that ending inventory from our goods available for sale, we have what's left is the cost of the goods that we must have sold, right? Okay, so by now you need to know that. That's actually a very logical calculation, right? Let's start out with what I have, you look at your checkbook. Your checkbook is really this, right? If you go grocery shopping, you go grocery shopping and, you've already been grocery shopping in the past because, you live on your own or whatever. When you go grocery shopping, you come home, you add groceries, right? You add the new groceries to your existing groceries, right? And so then you eat some of those groceries and, what's left over, right, is your ending amount of groceries. It's just very logical, okay? So beginning inventory plus purchases gives me the goods that I had available to sell to my customers. I walk around and figure out what I didn't sell. I don't necessarily sell every single item, so I might have some left over. That's easier to count. Then the difference between those two numbers is what I obviously sold, okay? That is a standard formula. Now, if you think about this, look, beginning inventory. And you could substitute this, the word you could substitute here is beginning merchandise inventory. Actually, in your problem, I believe that's what it said was merchandise inventory, ending merchandise inventory, okay? So that's this account right here, right? Okay, so these are also inventory accounts. You think that formula works the same way for those three inventory accounts since they're also inventory accounts? It does. We changed the wording slightly, but we're going to apply that same exact formula to all three of those inventory accounts in order to create this statement of cost of goods manufactured. All right? It's the same concept. We changed the wording, obviously, because we have different kinds of inventory, but the basis is the same. So notice here, here's my raw materials and raw materials inventory. All right? Look, beginning raw materials inventory, isn't that the same as this formula here? Beginning merchandise inventory, same thing, just a different inventory account, right? Add raw materials purchased, same idea, right? I'm just calling them raw materials because that's what they are. Gives me the amount of raw materials that I have available for use in production. I don't sell my raw materials. That's why we changed the words up there, right? It still gives me the total amount that I have available for something. Because they're raw materials, it's the total amount that I have available to use in my production process. Make sense? So that's the equivalent to goods available for sale in the formula, right? I count what's left over, ending raw materials inventory. Those are the materials that I didn't use. Ending raw material or ending merchandise inventory, right? Now here, it's the goods that I sold. But here, it's the goods that I used in production because I got another inventory account. These move then to the work in process account, don't they? Same idea. If you follow this format, what we'll be doing here is we'll be plugging numbers in, right? And that's going to become our financial statement. These are our titles. We'll plug numbers in next to them, and that becomes part of our financial. This financial statement is kind of big, all right? But if you follow this cost flow slide, which I love, okay, you can't go wrong. Now, manufacturing costs, all right? What they're doing here is they're assembling those three costs, just like this right here, okay? Direct materials, direct labor, manufacturing overhead together, before then considering that there may have been a beginning balance here, right? There may have been a beginning balance here. And when stuff comes out, I may have an ending balance. In other words, I don't necessarily, at the beginning of the month, I might have units in that work in process account that weren't finished at the end of last month. They still need processed before they're done, right? And throughout the month, I add more to that account. And at the end of the month, I only move out the units that are done. I still might have units remaining in this account, right, that aren't completed yet. The date doesn't have anything to do with it, all right? So these three things get added up together first in this middle part here, okay? Before then, we consider if work in process had a beginning and an ending balance, which it probably did. So, direct materials, direct labor, manufacturing overhead. Notice, materials used in production, the direct materials will get listed separately. The indirect materials will be part of manufacturing overhead. Okay, so I'm going to move to the next slide. And look at that. See? We've got direct materials plus direct labor plus manufacturing overhead is total manufacturing overhead cost, just like I was saying, right? Now, remember we talked about prime and conversion costs. Those were two terms we learned in Chapter 2. Here they just talk about conversion costs. They are the costs that you incur to take your raw materials and make them into a finished product. Again, the point is you need all three of those costs in order to get a finished product. You can't have just two of them or one of them. You have to have all three together in order to get a finished product, okay? All right, now that we have that total, we're going to now move that number into the work in process account. So watch, look, here's that formula again. We're just looking at a different inventory account. Beginning work in process inventory, right? Beginning merchandise inventory, beginning raw material. We're starting out with the same thing for all of them. Beginning inventory, it's just another inventory account, right? We add, in this case, look, here I bought my inventory already finished, didn't I? Okay? My raw materials, I bought them in their state, raw materials. But here, I'm adding to my work in process my total manufacturing costs. Isn't that what I've added here? 1, 2, 3. Okay? My total manufacturing, I'm making my own products, right? To give me total work in process for the period, just like I got total goods available for sale and total raw materials available for use in production. You see, it's the same formula. I'm just changing my words a little bit, right? To accommodate the kind of inventory account that I'm talking about. It's the same exact formula every time in every inventory account. Okay, so total work in process. What do you suppose I subtract from there? What have I been subtracting? It'll be on the next screen. What am I going to subtract? From the amount of total work in process for the period. Well, if it's consistent with everything else, what have I been subtracting? And the inventory, right? Okay. Well, how about that? I'm going to subtract my ending work in process inventory, and that's going to give me my cost of goods manufactured. Okay? Cost of goods manufactured. See, here over here was called cost of goods sold because I didn't make my own goods, right? I bought them already finished. This is cost of goods sold, or cost of goods manufactured, excuse me, because I made those, right? But the formula is exactly the same. We changed the words up a little bit just to accommodate that particular type of inventory account. All right, so if you follow this, you're not going to go wrong at all. All right, now, what's you'll see on this next screen here, I'm going to back up. This last column to the right, this work in process column, is just reproduced on the next slide. They couldn't fit everything on one slide. And so it's the same one, but this is how it works into our calculation of cost of goods sold. See, remember, what did I tell you this was the equivalent of? Beginning merchandise inventory for the retailer is the equivalent of finished goods inventory for the manufacturer, right? So now we're just moving into the finished goods inventory account. Same idea, but again, because we made our products, we're calling them finished goods, not merchandise inventory, that's all. But this is the equivalent to the merchandise inventory account for the retailer. So now, beginning finished goods inventory, right? Beginning merchandise inventory, same idea. Plus purchases. I didn't make my own goods if I'm a retailer or a merchandiser. If I'm a manufacturer, I made my own goods. That is called cost of goods manufactured, which is what we just figured out, right? See, this number here represents this process. Remember I told you we have costs associated with this process now that we didn't have before. So really when I get to here, it's the same spot that I'm starting at when I'm a retailer or a merchandiser. Gives me cost of goods available for sale. Cost of goods available for sale minus ending finished goods inventory. Minus ending merchandise inventory, same idea. It gives me cost of goods sold, cost of goods sold. But I have to calculate this number, right? Because there's a whole process associated with that. And that's what that cost of goods manufactured statement is. It's to account for the process that comes before the point at which we're ready to sell. Okay. You guys all right? I know it's a lot, right? So I'm going to not do that, skip over that here. And the best way, actually, okay, I'm going to stop there. The best way to take a look at this is to just do one together. So I'm going to switch over to my book. And we're going to do one of these. And the first thing we're going to do, the first one we're going to do, is we are going to do exercise 3.6, if you have a book, on page 116. If you don't have a book, don't worry, I'm going to put it up here. And I'm going to erase because I need lots of space here. Just before I forget, I already posted the PowerPoints for Chapter 4. I don't do all of Chapter 4, just a little bit of it. So we're going to cover Chapter 4 next Tuesday. Maybe we'll need a little bit of Thursday, and I'm going to review Thursday, and then we'll have an exam the following Tuesday. So let's see, what is that date? I have no idea. What is today? The 13th, right? So a week from today is the 20th. So the 25th, does that sound right? Is that a Tuesday? Tuesday the 25th. That's going to be your first exam on chapters 2, 3, and 4. And there will be a review. You'll see how I do reviews in here. But I like just to give dates when I'm certain of the date, and I am certain of that date. So mark that down. You're going to have your first exam on the 25th. Okay. So if you can, have your PowerPoints handy as we go through this exercise 3, because I'm really going to just follow those for the most part, all right? Obviously, we're trying to create this in a format that looks good, too, so, we might have a little bit of editing to do, but this goes on to say here, Primaire Corporation has provided the following data concerning last month's manufacturing operations. So here's the purchase of raw materials, indirect materials. Now, we didn't see that in our little data thing, so we'll talk about that. Direct labor, manufacturing overhead applied to work in process. This is something called underapplied overhead. I haven't talked about it yet, but I will. Here we have our 3 inventory accounts: raw materials, work in process, finished goods. Here are the beginning inventories for each of those. Here are the ending inventories. You have to keep in mind that beginning and ending inventories aren't zero, right? Almost all of them will have a beginning balance, something left over from the previous month. And then as they move out of that account and into the next account, there's probably going to be a balance remaining. It's not 100% of everything coming in and 100% of everything going out. That's not realistic. So we're going to do 2 things: prepare a schedule of cost of goods manufactured, and then prepare a schedule of cost of goods sold. So a couple of these items I've just saved to explain to you with an example, because I just think it's easier. All right, so what does every financial statement need first? A proper what? A proper heading. Yes. So this is Primaire Corporation, and I'm actually going to be using just 2 columns right now. Okay, so if you're trying to spread this out on your paper, 2 columns will do it. And we always identify the name of the financial statement, right? Now, we're not really preparing this for anybody outside of our company, but we might be giving this to our employees, right? Because everybody, no matter what department you're working in, you're probably following some kind of budget, right? And this also kind of plays into that budgeting process as well. So this is going to be they call it a schedule. I don't care if you call it a schedule or a statement, but I'll call it a schedule. Schedule of cost of goods manufactured. And then the third thing that we need, which is super important, it says, we need the date, right? It says concerning last month's manufacturing operations. So we'll just pretend, since last month really was August, we'll say for the month ended August 31st. Now this tells me that the numbers that I'm reporting represent the activity from August 1 through August 31. You guys with me? All right. So look at your PowerPoints. Look at that first slide. What are we going to be doing first? What section are we working on first? Okay, yeah, and then actually in this case, I'm going to change that up to read direct materials, and I'll tell you why here in a minute. If you don't have indirect materials in a problem or listed, listen carefully, if you don't have indirect materials, see we do in this problem, right? It says indirect materials. You can assume that all of your raw materials are direct materials, okay? If it doesn't say anything about indirect materials, assume that all of your raw materials are actually direct materials, okay? I can't assume that here though, because I actually have a number that represents indirect materials. So what I have to do in this first part is I actually literally have to figure out what are my direct materials, because my raw materials must include what? Both direct and indirect. Because it tells me here I have indirect. Look, it says indirect materials included in manufacturing overhead. So in this manufacturing overhead number, there's 5,000 of that number, this 87,000. 5,000 of that is indirect materials. I need to identify that or account for that, okay? All right, so bear with me. We're calculating direct materials first. We're starting out with raw materials beginning inventory, just like your PowerPoint says. Now, I don't mind if you abbreviate, okay? Because this is, like, a lot of this stuff gets to be, sort of a pain. So RM, I can tell, is raw materials, all right? That's fine. What was that number? What am I looking for here? And when we do homework, I like to have you guys check off things in your book, though some of you don't have a book. But as we're going through these, you can check them off because you're not going to use them again. And it kind of helps you to kind of stay organized. So my raw materials beginning inventory is what number? 12,000. So I'm going to have two columns. This is actually my innermost column here, just FYI, in case you're... So I'm going to have another column over here still. Okay. According to your PowerPoint, what do I add to that? Thank you. Raw materials purchases, right? Raw materials purchased. And what's that number? 30,000, right? And it says add, right? So 30,000. Okay. I'm still in that. I didn't move over another column yet. I got one column to the right yet to that number. So raw materials beginning inventory plus raw material purchases is equal to what? What do we label that?
Raw materials available for use in production.
Raw materials available for use in production. So I don't need a calculator just yet, right? I can do this in my head, 42,000. I didn't lose anyone yet, did I? Okay. Now, here is where I make the distinction between indirect and direct. So pay attention. I had to calculate my direct materials because I didn't know them. I have to assume that my raw materials are both direct and indirect simply because the problem lists an amount of indirect materials. Had the problem not listed indirect materials, I would just assume that all of my raw materials were direct. And then I can use those two terms interchangeably, raw materials, direct materials, as long as they're all direct. But what I need to know is what my direct materials are. Because if I don't subtract them out of this total, they're already in this total, I will count them twice. So all I'm going to do here, and this is not in your PowerPoint, that's why I'm saying this, is less indirect materials. Okay? Now, I also have to subtract out something else. What is it? Ending inventory. Yeah, see, so let's do that first. Let's say, okay, that was 5,000, right? And then I have let me be consistent here, less raw materials ending inventory. If you do not have indirect materials, you don't need this line. Students say, but I like, put a 0 in there then, I don't care. You want to be consistent. If you want to use the same format, that's fine. Just you'll know, because in the graded assignment you're going to get, you don't have indirect materials. So it'd be 0 for you, or you don't have to include it at all. Do you understand? Okay, so what's my raw materials ending inventory? 18,000, right? Okay. So what are my direct materials now used in production? So 42,000 minus 5,000 minus 18,000. Oh, come on, folks. You're supposed to have calculators and 19,000. Okay, now I'm going to use my far right column here. So there's my first number for that right column. 19,000. So this part here identifies that first PowerPoint that we looked at, calculating the amount of direct materials used in production. All right. The second part now is to assemble our manufacturing costs. So in that middle PowerPoint, all we did was we added up direct materials, direct labor, and manufacturing overhead, right? So that's really the next part here. So I have direct labor, which is given in the problem. What is it? 58,000, right? Okay, good. And then I have manufacturing overhead that was applied to work in process, and manufacturing that manufacturing overhead applied to work in process was based on a predetermined overhead rate. Just keep that in mind, right? That 87,000 came from those steps that we did, that we completed earlier. And just like that exercise we did at the beginning of class. This underapplied overhead I'll get to a little later, okay? I'll get to that a little later. Not ready to deal with that just yet. What do I call the sum of my direct materials, direct labor, and manufacturing overhead? What label do I give that? Total manufacturing cost. All right, so add those up for me. What do you get? 164,000. Okay. All right, now I'm just going to actually rewrite this up here because I don't want to erase. So I'm just going to put that up here so I can continue. My far right column too. I just want to flip back here real quick. So in this PowerPoint, after we found our total, that's where we are, right? Okay. Notice it says here we have to add it to beginning work in process. Well, instead of writing this a second time, I mean, I only wrote it up at the top of the page just because I'm out of room. I would just continue right below here. And instead of, I'm going to just flip-flop these two in my actual statement because, right, it's the same thing, right? So now what I'm going to do is I'm going to add beginning work in process inventory right here. Does everyone see what I did? And I like to abbreviate work in process, WIP. You can do that too. Okay, so I'm adding beginning work in process inventory to my total manufacturing costs. I already have them. I don't need to flip-flop those around. So what's my total beginning work in process? 56,000. Okay. And according to your PowerPoint guide there, when I add that number to total manufacturing costs, so I could flip-flop those around if I wanted to, what do I get? What do we call that?
Total work in process for the period.
Yep, total work in process for the period. Okay, so 164 plus 56. 220. Okay. Okay, according to your guide, what do we do next? Subtract what? Yep, subtract ending work in process inventory. And what's that number? 65,000. Okay, and that gives me what?
155,000.
What do I call that?
Cost of goods manufactured.
There's my cost of goods manufactured. Yeah, excellent. Excellent. So that's number one. This is actually number one. Number two, then is just the cost of goods sold. But it's important that we do that because I still haven't addressed that thing called under-applied overhead. All right? So for the cost of goods sold, I'm going to skip the heading, but this is what I would use, right? Primary court, schedule of cost of goods sold, and then the date. But for time purposes, I'm going to just blow right by that. All right. So how do I calculate the cost of goods sold? Look at your finished goods inventory guide there in your PowerPoint. What do I start with? I'm calculating cost of goods sold. That's what I'm calculating. So that's the PowerPoint that shows the finished goods inventory account, the formula there. What do I start with? What's your PowerPoint? Beginning finished goods inventory, right. Finished goods is just FG. How about that? Do you appreciate my abbreviations? I let you abbreviate instead of writing all these. I had a teacher that wouldn't let us do that. So that's why I let you abbreviate, because it drove me crazy. Okay, beginning finished goods inventory. What's that number? This is just one column too. 35,000. Okay, just given, right? All my numbers are given. I'm doing a little bit of adding and subtracting, but other than that, I'm just using the numbers. In real life, where do these numbers come from? Where would all these numbers be housed? What record? Because they would be the results of journal entries that were done. Remember, we still call journal entries, right? It would be the result of journal entries that we journalized and we posted to the ledger. Yes. So all these numbers come from the general ledger. Okay. Unfortunately, in real life, somebody doesn't hand you a textbook with, everything written down nicely. What do I add to my beginning finished goods inventory? Cost of goods manufactured. Where do I get that number? Didn't I just calculate it? All of our financial statements are linked all the time, no matter what we're doing it for. This is internal purposes, and they're still linked, right? They're still linked. So that gives me the goods available for sale. Okay, so that gives me 190, right? Okay. What do I subtract? Finished goods, ending inventory. What number is that? That number is 42, right? Okay, now, you gotta pay attention here. So that gives me 190 minus 42 is 148, right? Okay, I know in our little format there it just says cost of goods sold, but I have to tell you that this is the unadjusted cost of goods sold. And you're like, well, what does that mean? And I'm going to tell you what that means in a minute. So it goes back to this right here. Where am I at? Okay. Highlight manufacturing overhead. Direct materials are based on actual values, right? I mean, we got purchase orders that can prove how much we spent for materials, right? Direct labor is also based on actual values. All is good. But this manufacturing overhead, and the word is applied, right? I didn't write that down, is based on estimates. We take estimated manufacturing overhead and we divide by that estimated allocation base, right? That's how we got that predetermined overhead rate. See, that still plays into this. That predetermined overhead rate is an estimate. We multiply it by something to get that 87,000, but the key is it's still an estimate because we estimated at the beginning of the period. Well, at the end of the period, in this case, August 31st, we have our actual numbers, right? So here's what I'm telling you. If this is manufacturing overhead, okay, this is actual on the debit side and estimated or applied. Let me actually put applied. Applied on the right side. This is the estimated part. So that 87,000 is the amount that was over here, because what happens is that eventually goes to the finished goods inventory account. This is based on an estimate done at the beginning of the year, but throughout the year, when your bills start to come in, your rent, your utilities, your insurance, all of those things get debited over here because they're actual bills. So you don't get them all. You don't know what your manufacturing overhead costs are going to be exactly at the beginning of the year, right? Because you have to go through the year, you get bills. So at the beginning of the year, you have to estimate it. But throughout the year, you're getting real bills, and that's what's getting debited to that account. So what it's saying here is, look, you underapplied. Underapplied overhead is $4,000. You underapplied this number by $4,000, which tells me that the actual amount of overhead was $91,000. Because the difference between these two is that number, right? Is it 91 minus 87 is 4, yes? Right? So that means that there was still 4,000 left in here. Because estimate actual at the end of the period. Remember I told you we'd have to deal with that eventually, all right? They didn't give me this 91,000, but I could figure it out because it says that I underapplied. Think of the word underapplied, use underestimated instead. I underestimated. That's what underapplied means. What do you think overapplied means then? Overestimated. That might make more sense, like it does to me. So underapplied means underestimated. I underestimated how much overhead I should apply. Well, I still have to apply the 4,000. At the end of the period, I got to find a way to deal with it because it's still overhead that I incurred, rent, utilities, whatever it was, and I still have to give it to an expense account because I did incur it. So here's how we deal with that. We deal with it down here. We add underapplied. And you're like, well, why am I adding it? Well, think about it. Underapplied manufacturing overhead gets added because I underestimated. I didn't apply enough. So it's an expense. So I have to increase my expense by that which I underapplied. And that was $4,000. So now I have an adjusted cost of goods sold of $152. And that's where I usually do it. I usually wait until the end of the period and I just adjust cost of goods sold by my over or underestimate of manufacturing overhead applied. Does that make sense? If this balance was a credit, so a debit balance is underestimated, underapplied. You better write this down somewhere, estimated, right? A credit balance is overapplied or overestimated. If I underestimate, I have to add more expense, right? If I overestimate, what would I do? I would subtract. Okay, I would subtract. This is extremely helpful, whether you know it or not. That's helpful when you're trying to figure all that out. Okay? Hoo-wee, I know, right? Now, I want to also bring your attention, I'm going to give you guys an assignment here. This is going to be super helpful. We don't do this on the board for fun. Oh, sure we do. But I give it to you so that you use it as a guideline when you do your graded assignment. Excuse me. So we have about 15 minutes. So I'm going to give this to you, and I'm going to give you a couple pointers here. So pay attention. Okay. So your graded assignment is exercise 311.